excellent.
Okay.
At these levels here, guys, circuit breakers are not yet triggered. You'd need another couple of points lower on the S&P, 208 points. And, I mean, traders predicted we would see it maybe in the first few minutes. It's still very possible.
Down 1,800. What a great time to hear from Secretary Mnuchin saying, listen, I don't think you have to worry. I think that there'll be low interest to no interest loans for the companies that otherwise wouldn't be able to make payroll because of just issues involving COVID. It'd be great. I'd like to hear from the Treasury Secretary.
So you're talking about trying to avert a wave of small business bankruptcy?
Yeah, that's the base of our country. And, is the base of our country whether, Procter at 115? No. The base of our country is the restaurant, the hotel, the airline. Well, airlines, obviously we don't want them to have a bailout, but we just need to hear that companies that are involved in the day-to-day management, small and medium-sized business that will not be able to meet their payroll 4 weeks from now, should not think that they have to close their doors. I think that door closing is really something that we have to think about.
Well,
McDonald's is going to be there.
A host of cancellations. South by Southwest in Austin, businesses there count on those 10 days to make their year.
Well,
milking conference, David, you were talking about it last week. Ended up getting pulled.
It got postponed until July, and of course hopefully it will take place then. But it's very much unclear what the world's going to look like in July.
Right. Well, you look at Treasuries. You look at the 10-year 4.43. Now this is it's inside baseball for most of Americans do not even understand that. Now some might say, this mortgage rate is really pretty good. But then Doug Yearley, the CEO of Toll Brothers, told me since he expects not a great selling season. I question whether you want to go through someone's house.
Yeah, we are just teetering, but not quite, down the 7% that would trigger a 15-minute pause in trading.
Okay, there's probably something to buy here.
Oh, we had some corporate news this morning, guys, as well. We had a large deal, Aon and Towers Willis. I'm sure you guys, Willis Towers, excuse me. I'm sure you guys have seen that one. Any other day, we'd be focused on that. We've got a Twitter settlement as we are just about. There it is.
Oh.
There it is.
Yeah.
Yep, there you see the cessation in ticks on the S&P.
Yeah.
Means the first circuit breaker
for whom the bell tolls
has been triggered.
Well, how about this? How about we take a very clinical approach and look at companies that we know have the cash flow, and you're going to be able to get that yield. So, for instance, the drug companies, some of the food companies. I say some because we know that we've seen stores that are empty in Milan. I don't think that happens here, but I think a drug company that has something that frankly can't be avoided. Do you really stop taking Keytruda? But here we go with Merck, of course, trading Halted. See, this is what I mean. Does that inspire confidence when I hit trading Halted, market-wide circuit? I want to actually see where Merck is.
Well, that also was a question this morning a number of people were raising. We're in a 15-minute pause right now. Does that help to
I don't think
bolster confidence, or does it in some way do the opposite?
Well, I think, I think we have no price discovery on companies that are really very good. Don't you want to get a 5% yield from a company that has a steady business?
Yes, I think.
As opposed to Reach.
I think in this current environment, anybody would be happy to take one where they felt like the dividend was quite secure.
Right. That would be terrific. Now, let me give you one. This is the big quandary. I'm going to give you the one that I spent a lot of time on this weekend. 61 years of dividend raise, decent to good balance sheet, but a lot of leverage to the economy, but mass. They have mass that many of us have in our. It's 3M. I find 3M is the great quandary. How do you go after a company that has a 61-year dividend raise with a company that just had the debt downgraded, but not serious?
But there's a litigation risk there.
But then you have PFAS. But I think 3M kind of encompasses, because a lot of people want to say, I want to buy 3M because they have the best mass. Yeah. And then meanwhile, people tell us the mass don't matter. Well, give me a break. The mass matter to be able to have confidence.
But hopefully that will be a relatively short-lived phenomenon.
But this is when the Treasury Secretary should grab a microphone and say, listen, we understand, a calm voice, we understand that we have circuit breakers, but understand we're watching this. We're not idle. And I know that one of the ways to show leadership again, if you're the president, is to say, listen, keep calm, carry on, let's play golf. But another one would be to say, you know what, for those who don't have the means, this would be a good thing to do.
Yeah, it is good to hear from your leaders to try to engender confidence. That said, I don't know who you choose. I guess
I'm going with
is who you
Mnuchin.
want.
Yeah, well, because he's been through the wars. He knows finance. He knows travel and leisure. He's a very schooled person, and I think that he is the guy I'm looking to come out. The president's very hard because the president is all weekend kind of telling us we don't have that much to worry about. I would like to hear, but if we do feel we have something to worry about, Fed has your backs. The Fed, federal government, not the Fed, which can't.
Oil is still trading, right, Carl? I mean, we still got not everything stopped, right? So I mean,
oil's moving.
Yeah,
Don't you feel the 15 minutes is
take
just
a look at oil and just see what that's doing right now?
Talk about it.
And talk a bit about
trading
what
there at
expectations
$32
may be. I mean, 32.44 on WTI.
Remember, it went to 26 in February of 2016.
29.50 last night.
Yeah.
Overnight low. Prior to the circuit breaker a few moments ago, the Nasdaq was officially down 20% from the high. That would put it on course to close in a bear market. Jim, are we declaring the end of the bull market tonight?
Yeah, I think that's certainly a realistic thing to say the end of the bull market. It's been a great run. I think that when you see companies like Occidental with a 20% yield, Occidental selling at $13 billion, which is a fraction of what they paid for Anadarko, I think you have to say to yourself, well, you know what, we're in different times, and a bear market. Well, we had one when Jerome Powell almost. We're down 19% from levels. Remember, Jerome Powell almost threw us in recession, and then he averted that, but he's helpless here. And I wish we'd stop talking about Fed policy. It's fiscal.
We haven't gone anywhere in the S&P, though, when you look at it now, since July of 18. I mean, we're back where we were.
Well, okay, how about this? Should you factor in a rise in corporate taxes because President Biden would immediately change the corporate tax rate? Is that a reasonable thing to do in an era where one president is not necessarily helping his cause, and another would-be president is not necessarily pro-corporate? 2342 on the S&P is the level that I expect.
What was that number?
2342. That's where we had the Powell bear market.
2342.
2350. What am I? Yeah, 20. What do I think? I'm like
just checking out.
What am I, like a legendary Wall Street funny man here? I'm talking about 20. I'm talking about a level that's perfectly realistic.
Bob Pisani's on the floor with Stacey Cunningham of the NYSE. You can help our viewers understand, Bob.
I'm just grabbing Stacey here, of course, the head of the New York Stock Exchange, Stacey Cunningham, joining us. And Stacey, we've had a halt here for 15 minutes. Do you want to explain what the market is doing right now, what the traders are doing?
Yeah, the market-wide circuit breakers are designed to slow trading down for a few minutes, to get investors the ability to understand what's happening in the market, consume the information, and make decisions based on market conditions. It's a plan that's put in place for situations like this. It's been tested. We test it every quarter. So this is operating as it's supposed to.
And the important thing is that this is not meant to change any of the fundamental facts that we're dealing with this virus. The purpose is to allow the trading community to seek liquidity.
Yes, and to give investors a time to absorb information and respond. And so that's really what it's designed to do. And it's operating as planned. And it's really a precautionary measure that we put in place so that the market can slow down for a minute.
We like to say earlier that these trading halts, the circuit breakers have a very long history. They go back into the late 80s with the big crash in October 1987 when it dropped 22%. But it's changed over the years. It used to be, of course, a point system. Now it's gone to percentage system. Used to be the Dow. Now it's the S&P. So the most recent update was 2013. These are continuously updated, correct?
Yes, as markets evolve, it gives us the opportunity to take a step back and see how have things changed and how does the industry want to come together to provide even more resiliency during times of stress. So after August 24th, 2015, we made a number of changes designed just for conditions like this.
And the important thing here is the market will halt down 7%. It's going to reopen very shortly in a couple of minutes. There are other trading limits, halts at 13%. So the next level, it wouldn't stop at 7%. It would go all the way out, and then there'd be another halt at 13%.
We would have another pause, another moment to catch our breath and reevaluate.
That would be in place until 325, and after that, there's no halt unless you drop 20% or more.
Correct.
Yeah, and of course, these systems changed over the years. The important thing is we'll wait here. We'll be here on the floor. Stacey will be here. She's been walking around talking to the traders. We'll be opening in just a few moments here. And Stacey, I know you're going to
say, Bob, over the years we've seen, way back when we've triggered these before, and the markets continue to operate. It's a long-term market for investors.
Okay, Stacey, thanks very much. I know you'll be around. Guys, we'll be down here on the floor monitoring the action. Back to you.
All right, Bob, thank you very much. Jim, for home gamers, is the easiest thing to do today is to watch?
Yeah, I think the cash is king. I don't think that they should feel like, wow, this is a great opportunity yet. I do feel that a lot of people who are on fixed income are going to struggle right here and think, well, what do we do? And that's why I'm so hung up on the idea of let's build that portfolio that will have no problem with the yield. And there, what you want to do is you want to look at the balance sheet. And if you can't look at that balance sheet, maybe you have to just stay in cash. You have to have some ability to be able to judge whether the company can pay that dividend. But I do think that caution is still recommended. And I do think that the longer that the Treasury Secretary doesn't come out, is the longer that the limits are going to be in play and we're going to hit that magic level.
What do you say if you are the Treasury Secretary that you feel would be beneficial in some way?
I think to say low or no interest loans would be good. I'm just, let's just be, can I just speak personally for a second before I leave? We have a payroll. I have a payroll as a small business.
At your restaurant?
Yeah, and it's substantial because we have lots of employees.